Robschild, nothing I say is investment advice. Welcome to the show where we look at financial markets through crystal ball gazing. JP Morgan once said, millionaires don't need astrologers, but billionaires do, and so we begin. Today is January 30th, 2024. Generally speaking, the market's waiting for the big Fed meeting tomorrow where they officially announce whether or not they're going to cut rates. There's a 100% chance basically that they're not cutting rates this meeting. But the important part of it is what they say that indicates what they may be doing in the next meeting and meetings after that. And so that's kind of the most important big thing going on a daily basis. Today I wanted to touch on the S&P 500, the VIX, the Fed probabilities. We had a little bit of a switch there. Some things going on with TLT in long bonds. And I wanted to talk about momentum, specifically momentum funds and momentum strategies and how those may play out to be a weaker strategy moving forward no matter what happens really in markets. And I'll explain that as clearly as I can. First chart we have for you is the S&P 500. You can see that we have a little bit of a doji looking pattern which can indicate a reversal. However, it is officially an inside day when we have the open and close inside the green candle, which indicates a higher probability of the market continue to rip higher. This aligns with BlackRock's view, which we'll get into later in the show. The next main chart here, my crystal ball correctly predicted that this would happen. I had stated yesterday with my crystal ball reading that topping tail on the VIX indicated a pretty strong indication that we were going to reverse, and we did. And so we had this one move clearly downward on the VIX. As I had said yesterday, there was a little bit of a divergence between other fear and greed metrics and the VIX, and the VIX followed suit, it looks like, from there. Next, one little thing of note is the CME Fed Watch tool. You can see instead of 6 rate cuts, we had it flip to only 5 rate cuts today. And if we look at that specifically on investing.com, you can keep track. They're talking about the December meeting 2024, and you can see from these numbers they didn't change that much, but they changed enough to flip the probability to be more on the side of no cut there. And so a little bit of more caution in the sense of possibly less rate cuts than were expected coming into pricing in the market. And so if you don't pay attention to anything else going on in markets, the Fed funds futures is the thing that I think is the most important thing to be following and being aware of. Last main chart I want to share today is the TLT, the bonds. As you can see, we are breaking out higher. This could represent a gap fill. It could represent a reversal. Again, my crystal ball says nothing right now as far as where rates are headed. If we're headed straight back down, if the long end of the curve is going to continue to see lower yields, I don't see anything there. But one other part of this to note is that it was very interesting was how it moved on the day. This is the beginning of the day here. We have this sort of parabolic move going at the end of the day here, which can indicate strength. So we could see a continuation of this trend super short term. An important headline coming out today was BlackRock, very important securities manager, had an update of putting the S&P 500 from neutral to overweight, basically meaning that they're bullish for the next 6 to 12 months, stating that they're seeing sort of they're seeing a broadening of investment in other stocks to help the market move higher. Now, along with this, I think it's important to understand you may have heard other people talk about with how the Magnificent Seven have been getting kind of ahead of themselves in price. They've been going up a little too much, and I want to talk about that a little bit. We have a article from January 9th, 2024, not very long ago. I just want to highlight this one phrase here. The S&P 500 has a forward price earnings ratio of about 15, excluding the Magnificent Seven. And so 15 is nowhere near what it is when you include the Magnificent Seven. When you include them, it's about 35. Now, this is very significant. This is, only 7 companies raised, more than doubling the PE of the entire S&P 500. That's huge. And so, if these companies continue to maintain a lot of speculative value or increase their speculative value as the market broadens, we could see a major run up overall in the S&P 500. However, one thing I want to draw caution towards are momentum strategies. And I'm going to bring up reasoning why. So here's momentum, iShares momentum. If you go to their holdings, they have the top 10 holdings right here. This is 41% of the total assets of this fund, 41% of it. It's these 10 companies. And if we go through them and quickly look at their PE ratios, 36, 35, 83, 39, NVIDIA, 83, Eli and Lilly, 116, Adobe, 52, AMD, 1,564, Alphabet, 29, and Netflix, 46. So these, these holdings of a momentum strategy, they're holding all of the things that have an immense amount of speculative value. I mean, not to say that that speculative value can't become true in the future, that its future earnings can't represent that valuation. But, if you're going to be a conservative investor, you can see how, these stocks are much more overvalued than all of the rest of the stocks. The rest of the stock market, minus the Magnificent Seven, which a lot of these that I listed here are a part of, the PE ratio is only 15, and that's nowhere near as high as 35. And that indicates that, you could even interpret that as being undervalued. But if you're invested in a fund like MTUM, 41% of the holdings are these companies that are already incredibly overvalued. And so, if we see a situation where money starts going more towards the rest of the stock market and out of, removing some of the speculative value from this, which would be a normal thing to assume, a fund like Momentum will underperform the S&P 500 by quite a bit, I would argue. So main points of the day: the stock market looks like it wants to be bullish. There's even whispers of tomorrow's meeting flipping March's probabilities to being a cut in March, as soon as March. There's whisperings of that on the internet, and that would be extremely bullish, super short term for the stock market. And that's pretty much it. We're all waiting 2 p.m. tomorrow. If you want to watch it live, I can't because I have other obligations to attend to, but I will certainly watch it when I can and give my thoughts and my crystal ball readings on that tomorrow. Thank you for watching, and that's it. Robschild.